let's focus in on the retail investor participation. Have we seen many demat accounts open of late? Which are the kind of sectors and that investors are looking at? And what is the demand outlook for tier 2 and 3 cities, as well as will the growth momentum continue? To answer that and lots more, joining in on the show is Nithin Kamath, founder and CEO at Zerodha, as well as Vijay Chandok, MD and CEO, ICICI Securities. Good to have you both, gentlemen, on board. Nithin, just to begin with you, what has retail participation been like over the last few months, especially at times of this acute market volatility? Update us on the new demat accounts that have opened, and has growth sustained on a month-on-month basis?
Yeah, no, surprisingly, we're still adding as many customers as we did a couple of months back. Originally I had thought that, if market were to have a drawdown, we'll probably see, like a drop off in terms of new user acquisition. But at least for now, it's sustaining. So the last, I think on Thursday, when the markets were down 5%, that was the day we opened the maximum number of accounts in a single day till date. So it seems like a lot of people, are tracking the markets and are looking at opportunities to enter the markets as well.
And Vijay, are you seeing a similar trend, assessing the overall market sentiment at a time when volatility is really at its peak? Are investors continuing to have a sustained, approach to the markets in terms of opening of new accounts?
Indeed, when it comes to newcomers to the market, new demat accounts, the trend is sustaining, and perhaps it's grown a bit compared to the past few quarters. However, when you talk about ticket size that is getting traded, I think we are seeing some kind of a softness, particularly in the last month or so.
Nithin, good morning. This is Nantara. Now, I remember recently you had put out that information, right, about how 99% are not even beating fixed deposit rates. So with the kind of volatility that we're seeing, people must have lost serious bucks also in the recent sell-off. What is the advice that you folks are giving, or the kind of blogs that you're putting out for the retail investors who are obviously also scared, wondering should they take cash off the market, what they should do?
Hi, Nantara. No, firstly, that 99%, that the reference was to people who trade the markets and not really investors. I think one of the only reasons why our business and, for Vijay and for the industry has grown is because I think overall investors have made a lot of money over the last 2 years. As in, a lot of people came in, bought the dip, and then, they kind of rode the way up, invited friends, they came in, invested. But it kind of, when people start trading for a living, or, start allocating large amounts of their own capital to, actively trade the market, that's when, the odds of winning, significantly kind of goes against them. Right. So in terms of advice, I mean, it's the same, essentially the advice doesn't change. I mean, how to trade is really it's just the 5-6 very basic rules to follow, which is don't be levered, don't allocate too much of your capital to trading, investing, markets itself, because the odds significantly go against you, if markets can induce fear and greed very easily in you, and that happens usually when you are over leveraged. And we have, as a business, constantly over, from the time we've started the business, we've always constantly told customers not to take leverage. I mean, we've even the leverage within the ecosystem that exists is almost like a hidden feature, so it doesn't show up by default to people. And as long as you're not doing that, I was yesterday, I think I was listening to a Charlie Munger quote, as long as you don't lever and you don't short the markets, I think the odds of winning automatically goes up significantly, so because we are in a growing economy, and as long as India does well, companies in India will do well as well. So yeah, portfolio diversification across sectors, not being levered, even if you're trading, doing it with a small amount of your capital, like not more than 5-10% of your net worth, stuff like that is what we are constantly nudging our our customers, users, and generally even non-customers. We've been pretty vocal about this online.
Now, whether it is Zerodha or ICICI Securities, and Vijay, I'll come to you for this one, you've all been beneficiaries of the IPOs in 2021, right? The kind of listings and from companies that the millennials, the Gen Z, the first-time investors, they were familiar with it. But then we've all seen what happened with those new age stocks. Right now, we don't know what's going to happen with the LIC IPO, what the pipeline is also going to look like given all of this volatility. So, Vijay, how will you just ensure, or what will you do differently or attempt to do to make sure that you don't lose the retail investors that are already with ICICI Securities, but you can actually help in the penetration of the markets?
No, indeed. Just to add a couple of more points that Nithin was mentioning, I think this is a time for investors to be patient. The temperament has to be there, which is very important, and then following their conviction and doing research and sticking to high quality and not getting sort of unnerved by market volatility. That's the additional stuff that we keep telling our investors. We keep providing a lot of educational inputs on financial markets. When it comes to IPOs, I think we clearly are seeing that the interest in some of the new age particularly amongst the retail is pretty high. Some of the experiences that has happened in the past has not been too good. But I suppose that's part of the risk that the market offers. Of late, with the mother of all IPOs coming, again, we are expecting a bunch of newcomers, particularly policyholders, who have a preferred allotment, preferred pricing rather for them as notified, is likely to bring another set of investors into the market. So I suppose it's about playing to your risk appetite, doing research, and understanding that markets is not one-way street all the time.
Right. So just in terms of the sort of fast move that you've seen on the downside for the market, have you seen volume substantially going down? I mean, people would have, be on leverage. They would have been forced to cut their positions. So have those volumes suddenly come down?
Sorry, is this for Vijay or me?
You can take it ahead.
Oh, okay. Yeah. No. The thing is, I think volume is a factor of volatility, right? So it's just not market going down. So as long as there is volatility, trading volumes, go up. So trading volumes are actually up over the last few weeks because there's volatility. Usually, they say, right, there's usually a calm after the storm as well. So it's, you get to know how much of the damage the volatility has caused only after a few weeks after the volatility. So for now, trading volumes, because a lot of for us, Vijay, and generally exchanges, right, a lot of these volumes are really speculative in nature. The equity investing volumes, people buying and selling. I mean, while buying, again, that the day markets fell 5% was our largest day in terms of new stocks bought. But in terms of selling, people, when there's a drawdown, people get into a shell. They want stock price to recover. There's usually a loss, like a disposition bias kinds, so which is, loss aversion, disposition, etc. So people tend to, hold on to stocks if there's a drawdown. So currently, given that almost all the stocks are probably sitting, if someone has bought over the last few weeks is sitting on a drawdown, the selling volumes have reduced, equity selling volumes, but buying, there's a lot of interest.
Right. Nithin, just as we see a lot of this fall, a lot of this volatility, as you said, leads to an increase, maybe on the selling side in terms of volumes. But do you expect a lot of the customers who have come in the last 2 years because of this bull run or because of this sort of change in shift in, saving pattern or change in financial investment as well, a lot of them would stay back? So once things stabilize, once they start to get their salary, once again, you continue to see the flows or the, systematic flows coming in?
No, the silver lining, I think, in the new user growth over the last 2 years, right? I mean, a lot of them are, for us, almost 70-75% are first-time users and generally less than 35 years of age. right? And the amount of money they've invested in the market is actually not much. I mean, it's 50,000, 25,000. So it's maybe a month's salary, 2 months' salary, right? So the ability to kind of take this as in a stride and look at this as a learning experience and continue doing what they're doing is much higher. So this is not like a 2007 where the average age of people who came into the market was over 40, and people who invested money were mostly from their retirement savings and etc. Right. So the good thing this time has been that this is a much younger population, and there is a lot of potential future capital that'll get generated by this population. So it's good that everyone's educated on financial assets. So if and when there if there are people who are sitting on losses, I think if I had to take a bet on it, I'd say they'll continue to come back. I know, of course, this is all got to do with how the markets overall do. If we go to a multi-year bear market, I don't know how how that'll play out. But if markets were to bounce back, I think this crowd will come back again, and invest more.
Vijay, owing to that kind of a demographic that Nithin was alluding to, and at a time like this when there is this choppiness in the equity markets, what about the average, trade size? Has that now come down?
Yeah, trading volumes have gone up, as Nithin mentioned. On the cash side, we are seeing that the volumes are actually a little lower. On high volatile days, particularly on the downward side, we suddenly see surges. So there is some intelligent buying happening. There is conviction amongst the investors in the market. But indeed, the average ticket size, particularly in the month of February, we are seeing some sort of a contraction there relative to the previous month.
Worried at all about the rising competition among discount brokers? How are you assessing it within your space?
Yeah, it's been a competition for last several years now. I think the markets are growing. There is space for all of us to grow. All of us have gained growth, gained market share in different areas. So for us, it's about continuously improving. We are completely being focused on what the customer wants, segmenting the market and providing different kinds of plans that different segments of the market look for. We are totally committed to long-term value creation for our customers. So that's how we are totally focused. You've got to obviously be very value-centric when you provide your plans. So I think we've improved quite substantially in these areas.
Okay, we're going to have to wrap up this conversation. But before that, final question, and Nithin, I'll take this one with you. The very fact that now retail investors can buy a Tesla and, the FANG stocks, thanks to the NSE subsidiary exchange at the Gift City, what is that going to mean? And you have any plans around that?
Yeah, no, I mean, we have applied for a membership. It's still in a regulatory sandbox, the IFSC offering. So that means, NSE, IFSC can't really onboard more than 10,000 customers. So I think, before they can really open up to everyone and all number of customers, I think it'll take a few months. Hopefully, we should be live by then. It kind of solves for two problems, right? As in the IFSC route. One is, people wanting to invest in international stocks generally had this whole cost of remittance, which was quite high. If you had to send money from India to a US broker. But in IFSC, you can potentially reduce the cost because the bank on both sides is really an Indian bank. So when you send money to IFSC, it gets converted to dollars, but because the bank on either side is an Indian bank, you can potentially do it at much lower remittance costs. The second problem I think IFSC also solves for is this whole trust deficit that exists. If you invest with a US broker, he's not really regulated by any Indian entity. So if there were issues, it is, it potentially opens up, to an Indian resident investor some challenges. Now, the fact that IFSC is regulated by IFSCA, who's a government of India body, so I think it can kind of bridge the trust deficit that a lot of people had, in sending money out of India to a US broker that they don't really know about. So I think in the longer run, it's a really good move. There are still some chinks in the armor in terms of transaction costs, in terms of Like even, as long as you make remittance, see, one of the reasons for growth of all of us, is also the payments piece, right? I mean, while we talk about IPO, we talk about, online onboarding. Personally for us, I think a lot of new customers came in because, people, when they had an intent to buy or sell, they could transfer money instantly, right? And using UPI or, any of the India stack, things. So as long as the remittance isn't solved for, I don't really see how this will scale quite a bit. Someone should solve for that problem, which is, instantly being able to remit money from, say, India onshore to Gift City offshore. So if that were to be solved, I think the scope of this is significantly huge.
So I'm going to jump in here because we offer these services to buy US stocks through our platform, ICICIdirect.com. And this is something that we launched in partnership with Interactive Broking. Our own experience is that, particularly we've seen interest coming from the HNI side more than, the retail to begin with. The retail interest is pretty high, but in terms of numbers and volumes, I think it is still to size up. I suppose it is more a long-term play than something that's going to happen in the short term. The challenge that Nithin mentioned of currency, yes, while currency cannot be transmitted instantly, but I think the second problem is that can it be done online at least if it's not instant? So I think that's part of the challenge we've been able to crack. So it's all seamless and online. There is a time lag before which the currency gets into your account overseas for investment. But given what's happened right now, more interest from the HNI side than the retail. That's the experience we've seen.
Okay, so let's see how all of this pans out. We thought this was a great discussion to have today, given the kind of volatility that we're seeing. Retail investors also trying to figure out their own strategies for this equity markets, unprecedented times. Nithin and Vijay, it's been an absolute pleasure having you both on the channel today. Many thanks for taking the time out.